Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Wednesday, March 5th, as I record this before the market opens. So I'm just going to go over the usual tickers as well as I wanted to take a look at Tesla. Should be a pretty nice quick video. So let's dive into it though. The first one I usually go over in these is the UVIX, which is the 2x long VIX futures ETF. I like to trade this one just because it's not options, and I think it does have some pretty nice movements in it. And as we can see, yesterday it did close at a price of $38.64, being up almost 5% on the day, but pulling back about 5% so far in the pre-market. And so, I have to say I've been getting a little ahead of myself. I have been trying to, kind of label the top of these candles. I was thinking it was in after last week following Friday, February 28th, but we of course did go higher on Monday the 3rd, hitting a high of $38.63. So I adjusted this box. I believe I did Monday, Tuesday, and I'm not adjusting it. Actually, I will adjust it again today because we did put in this new high of $44.36. We did cross the blue line of $40.70, as well as this purple downtrend. I had been talking about these levels for some time. And I have to say, unfortunately, I did get out of my UVIX position probably over here on the 25th when we spiked up to a high of 33.75. Could have made a lot more, but for me it was just for a 20% swing, and I didn't buy it back on the dips here to $30 a share. And also it does look like this peach line, I made the moving averages a little bit thicker, but that was at, let's see, 28.72. So it looks like 29 was a really nice dip buying level before we moved up to those highs, going up about 50%. Getting up to that $40 level at around 40%. So just some really nice moves there. But what we're seeing now, we've got this big green candle. So that looks like there's some strength. These green candles have just been getting stronger and stronger. But then the candle from yesterday, from Tuesday, looks like it's a spinning top with a pretty big wick to the top side and also closing in the lower half of the trading for the day. That does look like it could be a topping signal or perhaps an indecision signal that this could be going either up or down. But really, I envision this being the top here at 44.36 as we are getting near the 2-week period where, I see that we form a top, and then we will be getting into another 2-week period where we start to form a bottom. So there could be some nice dip buying opportunities down there. But, because I'm not going to get ahead of myself and say that 44.36 is the top was hit on the 4th, I am just going to adjust the top of this to coincide with that high, still leaving, 2 more days of trading in this 2-week period, or maybe it ends on Friday. Who knows? But yeah, I'm just going to be adjusting this over here to 44.36. And so we've got our nice little, green and red shaded regions. And when we do start to pull back, I do suspect that we will be heading back to around 27, maybe getting to 26 or 25. Perhaps going even lower, maybe to around 22.50. I feel like on this next red cycle, probably not heading down to 17, but we are in this downtrending parallel channel. So I do think we will eventually start to head lower than, the 25.85. That was the prior low that we saw over here for this cycle. But, like I said, I think that we will be hitting 25 over the next couple weeks, so do keep that in mind. But then let's see, also, taking a step back with this, I do think it is interesting. The 200-day moving average is up there at around $47, and that does seem like it's starting to coincide with the top of that parallel channel. So maybe over the course of the next couple weeks, we start to pull back and then we start to move higher and then move up to maybe the confluence of levels with the 40-70 there, the parallel channel top, as well as the 200-day moving average. There could be a lot of alignment there, so do keep that in mind. But if I do switch over to the 10-minute time frame, we can look at the pre-market pricing over there as well as the after hours. Does look like it's just starting to cool off, so I think that we could start to head a little deeper into the 30s today. Currently, pre-market price is around 36.71, down about $2 from yesterday's close. But I could be wrong. It is a volatile market, and so we could be seeing some more upside. But like I said, I do think that this is kind of the top for the next 2 or 3 weeks before we start to form a bottom and start to turn around. But then quickly looking over at the VIX, it does look like, I got this little doodle here. Maybe that is what will be happening, as we do have this uptrending level that was acting as support over here. Did kind of flip to a little bit of approximate resistance over here. And so maybe we do pull back to that, consolidate below 23.76 before either breaking higher or breaking lower. And I would think that this will start to head down below $20 a share in the coming 2 weeks, but we will have to see. And then now flipping over to the SPY, this is the S&P 500 ETF, tracking ETF. This closed at a price of $576.86, being down a little over 1% on Tuesday, bouncing a little bit, about 0.5% in the pre-market. And we can see that, we were up at this red uptrending resistance level based on those 2 pivot points there, got rejected, which also coincided with, let's see, that was just, this retracement here, and it looks like we pulled down to the 786 right around 583, right around where we're currently trading at. But we actually did go a little bit lower. Let's see, 580 is just about where the cursor is. So effectively at where we opened yesterday, we're actually a little bit higher than that, and also getting to this downtrending parallel channel that I've drawn based on these 3 pivot points. And also we got kind of a sweep of the lows from January 13th when we hit a low of $575.35. Yesterday on the 4th, we hit a low of $572.25. So, anybody who had stop losses below this level, below 575, they got swept out of their positions, and anybody who was waiting for a test of that 200-day moving average there, right around 570, it looks like it's currently at 568.74. Anybody waiting to buy there, they might be getting left behind. Anybody who had a stop loss at 575, they got pushed out of their position, and we are now above that level, above this downtrending level from the parallel channel there. But we are below not only the 78.6 here, marked by this white horizontal line, but also this yellow downtrending level. So, it will be interesting to see where we go from here. Maybe we do follow something like this doodle that I have drawn here. We just have to first get above that yellow downtrend, maybe get rejected by that 786 before we start to break above it and go higher, which could lead to new all-time highs, which I suspect we will be seeing later this year, perhaps this month. I suspect this month, but we'll have to wait and see. And then if I do flip over to the 10-minute time frame, we can see we did dip in the first half of the day yesterday, getting down to 572.25. Then we really rallied, but getting rejected from that 786 around 583. Pulling back, but then bouncing from that 100% retracement there, that prior low at around 575.35, and then we are, following the bounce into the after hours and pre-market, are right around the confluence of these 2 moving averages, the 21-day in peach and the 50-day in yellow. I got to start calling that salmon. I think it's more of a salmon color than a peach color. But yeah, those are both at around 580, 581, and we are just below those levels. But anyways, flipping back over to the daily and moving on to the SPX, which is the S&P 500 index, which closed yesterday at a price of $5,778.15, being down a little over 1%, about 1.25% on the day. It looks like we kissed that 200-day moving average, which is at a price of $5,725.89. We got a low yesterday of $5,732.59. So it looks like being about $6 above that 200-day moving average, though. We did wick below, like I said, with the SPY, the low from January 13th, which was at a price of $5,773.31, and it does look like we close right around just above that bottom that we previously saw on the 13th of January, and that was 5773. We closed above that, so I think that's good, but it does look like we are below this light blue parallel channel as well as this yellow downtrend, just like the SPY. And so I am wondering if we will start to bounce around these levels before we break out and move to the upside. But anyways, there's enough about that. Let's move over to Bitcoin, which has been just, a wild ride over the past few weeks, having hit a low right around 78,000, or really, just think about it as just below 79,000. I actually had an order filled at 79,000, so I'm pretty happy about that. Before we did bounce, got rejected from this red uptrending level, which had acted as the higher lows uptrending support that we saw over here. And, that did flip to resistance. We got rejected from there, as well as this downtrending white line, which had acted as resistance here before we got a fake out break above it, faking people out before dumping on us. So just out of curiosity, let's see how big of a move it was from, let's see, the approximate close from February 20th. The closes here in Webull are not exactly right, but that was a drawdown of about 20%. And so, I'm sure you guys have heard this, but even in bull markets, even in bull cycles with Bitcoin, it is not uncommon to see 20 to 30% drawdown. So I do think that 78, 79 was a dip buying level, especially as we trade above this yellow downtrend. It will be interesting to see if we start to get back into the 90s. I did see it into the 90s just before making this video. We are currently trading right around 89,700, almost $800 there. So, let's see, do we get back into the 90s? Do we reclaim 92, 93, and start to head towards $100,000 a coin? Pretty exciting to be seeing this. I am excited, but I'm also prepared for the possibility of heading down into the 70s, or I should say deeper into the 70s. I do have, my eyes on 75,000 as well as 72,000. I am prepared to buy the dips if we do get down there. And if we do head down to 69,000 just for fun, I will probably, add a little bit more aggressively if we do get down there. But that's just my plan. You got to do what works for you. And I would just see that as being like a real opportunity, or at least, the best opportunity that we've seen since, let's see, November, October of last year. So I would be excited for dips down to there. But I suspect that, later in March, perhaps by the end of the month, we could be retesting 102, 103, and maybe getting back into that all-time high territory above 110, but we will have to see. And then quickly flipping over to uranium. This is the ticker symbol URA, Global X Uranium ETF, which closed yesterday at a price of $24.05, being up about 2.4% on the day and continuing higher, about 2% in the pre-market. And so, I am wondering if we are going to be forming a bottom here. I think that yesterday in the video that I did, I think I drew this green uptrend. So I had drawn this white uptrend based on the low from August 5th and the close from September 6th. But I thought, hey, if we're breaking below that, breaking below the 786 here, I might as well draw a trend line based on the two lows over here. And look at that. We hit a low of $22.91 yesterday on the 4th, which looks like, it looks like it kissed the trend line there. Did not quite get to it. You can see a little bit of a gap there. I'm not sure how well you can see it, but there is a very small gap between that wick low and that trend line. But I think that trend line 23 was an excellent dip buying opportunity for this ETF. And just like I had drawn out over here, I was talking about this coming down. I was being conservative, although impatient, with this purple doodle, thinking that price would be coming down to at least $25 a share, and then started talking about $24.50, and we actually blew past that, coming down to below 23. Now I think we get into kind of the stair-step pattern of forming higher lows now, and getting back to potentially fill this gap up here at around $30.50. If I do flip over to the 10-minute time frame, we can see that right at the start of market open yesterday, we came down to 22.91 before heading pretty steeply higher, before pulling back a little bit into the close, and then just kind of floating higher in the after hours and now pre-market. But then, I did want to just very briefly talk about Tesla. About a month ago, I had put out a video talking about some levels to the downside, really about $269 a share, thinking that because we have this confluence of levels, we might be heading down there. And so I'm just going to clean this chart up a little bit, because I think some of these levels are not as necessary as they used to be. But let's see, it does look like the 618 from this Fibonacci retracement. I'm actually just going to make sure that is marked to the correct levels. It does look like it, and then I just need that 618 there. I might make that line thicker. And then what do we have over here in these white lines? Just some prior highs. I think this one is perhaps notable, so I should. That's really just, approximate tops over there. So maybe that's actually not too notable. I can just take a step back to find that was a level. Same with over here. And we are below that, so I don't think that one's too useful anymore. This purple level here, that let's see, I just want a level, 269. I think 69 is a funny level. We do have this gap down here though, so maybe that's a little bit concerning, but perhaps more immediately. And actually, I need to clean up some more of this crap that I got drawn up here. I'm gonna get rid of that downtrend. I don't think that's necessary. I will leave these ones down here because I think that they were actually maybe. Yeah, this actually, that downtrend did kind of predict that island bottom there, so maybe I do want to leave that one here, make that a little bit thicker, just so we can see it. Here we can see that island bottom there. It was a great dip buying opportunity, but then let's see those levels that I have drawn there. What else do I have here? Okay, yeah, so this is just a array that goes off into the future. We pierced that. We also pierced the 618 at 272.40. And let's see, the purple line, which is maybe a little bit arbitrary, 267.73. We hit a low yesterday on the 4th of 261.84. And I have to say, I was kind of getting attacked on X. I just reposted the video that I put out a month ago talking about us potentially coming down here, and somebody was effectively attacking me for, saying bad things about Elon. We're all aware of, when he said, "My heart goes out to you," how that was misinterpreted, and that has effectively been used against Elon, against Tesla. However your political views are, this is not about that. This is not about emotions. This is not about propaganda. This is about a company that is at a fundamental level that produces a better product. And so what we're seeing here at around 270, definitely at 261, I think is a dip buying opportunity, which is effectively kind of like this line that I have doodled up there. So I'm going to actually delete that yellow one. But I should caution though, I do have this gap down here at around 238.77. There is another gap though that's a little bit higher, and maybe that's a little more attainable, and that looks like it is the closing price from November 5th, which was at 251.44. So I'm just going to lock that into place, make that dashed and blue, so we know there are some gaps to the downside that it's quite possible we could be getting to, but also I think that those gaps could be bait to lure people in to want to go long at 250, 240, but then get left behind. I do think that 261.84 could be the bottom and that we could be bouncing from here, maybe not to all-time highs, maybe just to around 370 or so, but I think that this is a really nice dip buying opportunity. Personally, I was adding a little bit to my very small position on the way down. I added a little bit heavier, and I should stress a little bit heavier because my position is small, but I did add yesterday at 269. I feel pretty good about that, and we'll see where that takes us. I just wanted to share because I think it's just looking really good, and I think that later this year we will be seeing all-time highs, potentially getting up to $500 a share. But anyways, I gotta get headed to work, and so as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Take care and have a great day trading. Cheers, guys.